Hi and Assalamualaikum. My name is Anis Aisyah binti Badaruddin.
My name is Nurul Aina Natasha binti Rami.
Hi, my name is Celi Syafiqah binti Cik Azhar.
My name is Nurul Aina binti Zakaria.
Hi and Assalamualaikum. So I will start presentation with the table of content. So this presentation consists of 6 parts, which are the company background, horizontal analysis, financial ratio analysis, SWOT analysis, and also short-term future prospect. And lastly, we'll end the presentation with the conclusion. Now let's take a look at the company's background. Top Glove Corporation Berhad is a Malaysian rubber glove producer that also produces face masks, dental dams, and other products. Top Glove Corporation Berhad is a world-renowned manufacturer and distributor of high-quality rubber glove. Top Glove, founded in 1991 and located in Malaysia, has risen to become the world's largest producer of glove, having a market presence in over 195 countries. During the COVID-19 pandemic, Top Glove was critical in supplying the increasing global demand for protective gloves. As the world's largest manufacturer of gloves, the company saw an increase in the orders as healthcare experts, frontliner workers, and individuals sought improved protections against the virus. So the corporation made considerable donations of gloves to healthcare facilities, frontliners, and also unprivileged communities. These contributions sought to boost the fight against the COVID-19 and give critical protections to individuals at the front lines of the struggle. Moving on to the Top Glove horizontal analysis that had been extracted from the statement of profit or loss from 3 years of 2019 to 2021. So based on the above result, the revenue had increased significantly from 2019 to 2020 from 100% to 150.74%. So the COVID-19 pandemic had increased the demand for personal protective equipment (PPE), particularly gloves, as healthcare facilities and also individuals prioritize their safety precautions. So Top Gloves rapidly had increases its revenue from 150.74% to 340.78% in 2020 and 2021 respectively. So the increase in revenue is because Top Glove has a strong global market position and a broad supply chain network. So this network enables the corporation to easily make the transport glove, meeting the increased demand during the pandemic. So their capacity to ramp up production and also satisfy orders quickly could have helped to revenue growth. As for the Top Glove other income, it had decreased significantly from 2019, which is from 100% to 85.9% in 2020. On the other hand, in 2020 and 2021, the other income had increased rapidly from 85.9% to 216.1%. Based on trend analysis findings on the income statement, the company performed well in 2021 as there was a 116.1% increase in the figure of other income from the base year of 2019. Most of the other income in 2021 were contributed by the gains from investment, such as the dividend income, management fees, interest income, as well as their rental income. So Top Glove had made a strategic investment that will lead to positive return and an increase in their other income. Moving on to the administrative expenses, it had increased by 87.46% in 2020 and an increase by 138.45% from 2020 to 2021. This is because companies in the PPE industry had to prioritize their employee health and also safety by installing additional safety measures, equipping personnel with personal protective equipment, and also following the physical distance rules. So the administrative efforts and also resources were necessary for these projects, such as obtaining and distributing the PPE to the employees, developing workplace safety rules, and also conducting frequent health exams. This somehow leads to an increase of the administrative expenses of Top Global Corporation.
Next, I will present the financial ratio analysis of the Top Glove, which consists of liquidity ratio, solvency ratio, profitability ratio, and also market evaluation ratio. The current ratio is used to assess a company's capacity to use its current asset to satisfy short-term obligations. Having RM1.12 in current assets to pay RM1 in current liabilities, Top Glove has a current ratio of 1.12 in 2019. By 2020, the current ratio has dramatically grown from 1.12 times to 2.01 times. However, the current ratio dropped from 1.01 times to 1.98 times in 2021. The company's ratio movement was impacted by the company's current asset in 2021, which increased by 58,104,000. Calculations like the acid test ratio, also known as a quid ratio, are used to determine if a company has enough short-term asset to pay its short-term obligations. The acid test ratio for Topclub increased a little bit from 1.72 times in 2019 to 1.76 times in 2020. However, the company acid test ratio, which displayed an unfavorable ratio, is 1.46 times that of 2021. This demonstrates that the firm may have experienced difficulties in settling its current liability using its most liquid asset, particularly given that it will have a greater current liabilities in 2021. Inventory turnover reveals how frequently a business replaces and sells inventory over the course of a fiscal year. In 2019 and 2020, Topclub will be able to sell and replace its inventory 6.90 times per year and 7.56 times per year, respectively. Inventory turnover, however, has marginally decreased to 6.28 times in 2021. Due to the increased demand for gloves around the end of 2021 and 2022, Topclub will have a large inventory on hand. Although COVID-19 exists, the company is still able to sell its products, hence its inventory turnover ratio may be said to be performing effectively. The ratio of debt to asset shows the percentage of total assets that were acquired using borrowed money, which is shown as a debt on the balance sheets of the business. In the instance of Topclub, the analysis of its debt to asset ratio showed a decline over a 3-year period, going from 55.10% in 2019 to 28.89% in 2020 and then to 26.19% in 2021. Only 26.19% of Topclub's assets are financed by debt, while 73.81% are financed by investor or by equity financing, demonstrating the company's low debt to asset ratio. The debt to equity ratio reflects whether the company finances its activity more with the debts or more with shares. Topclub's debt to equity ratio shows a significant decline from 122.71% in 2019 to 40.63% in 2020, but only a little decline to 35.49% in 2021. It suggests that the company is on pace to achieve financial stability soon. The ratio indicates that the Topclub is more dependent on its debt in share capital and earnings than it is on its long-term commitment. The ratio of equity to asset shows how much of a company assets are owned by its shareholders and are not funded by debt. For Topclub, the equity to asset ratio rises from 44.90% in 2019 to 71.11% in 2020 and then marginally to 73 to 81% in 2021. This high ratio is still beneficial for Topclub despite a little increase in 2021, since it demonstrates that the business has a cheaper financing and debt payment expenses because of a higher percentage of its assets are owned by equity owners. The net profit margin is the proportion of a company's net profit to its sales. The ratio rises as the firm perceived industry health increase. Topclub's net profit margin is just at 7.66% in 2019, but it rises considerably to 24.72% in 2020 and then rises to 47.82% in 2021. The net profit margin for 2020 increased by 17.06% as a result of an increase in net income. The gross profit margin is a measure of the amount of income that is above the cost of goods sold. For Topclub, the gross profit margin rises from 18.41% in 2019 to 39.38% in 2020. As a result, the cost of goods sold for 2019 and 2020 would be 82 cents and 61 cents respectively. Only 18 cents and 39 cents will be used to pay for extra expenses in 2019 and 2021. It increased slightly to 67.86% in 2021, which indicates that 32 cents will be required to cover the cost of goods supplied. The return on asset reveals a company's profitability in relation to its total assets. In 2020, Topclub's return on asset increased from 6.46% to 20.55%. According to this, Topclub would deliver 6 cents and 21 cents in net profit for every 1 ringgit of invested asset in 2021 and 2022. However, it does rise to 79.98% in 2021 when Top Glove generates a net profit of 80% for each RM1 invested in asset. Top Glove will benefit from this performance since it will show a management and investor how successfully it can turn its asset investment into profit. Earnings per share is a common figure for estimating a corporate wealth, which demonstrates how much a profit a company generates for each share of its stock. 4 cents is the profit per share for 2019. Due to an increase in net income and fluctuating weighted average share outstanding, Top Glove performance rises to 23 cents per share in 2020. In 2021, the earning per share improvement went up to 75 cents. This is completely due to the increase in Top Glove net profit over the previous year. The dividend payout ratio reveals how much of a company earnings after tax is given to the shareholder. Top Glove outperformed its preceding year 2019. In 2020, thanks to its success in bringing its dividend payout ratio below 50%. The ratio showed a declining trend over the course of 3 years, declining by 61.36% in 2020 and continuing to fall by 33.07% in 2021. Next, for the Altman Z-score calculation. Particularly in the manufacturing industry, the Altman Z-score is an equation for estimating a company's chance of its solvency. It reveals that the Top Glove Altman Z-score with a value of 13.58 in 2021 are higher than 10, exceeding that the acceptable range of 3. Due to the fact that the numbers indicates a large difference, it signifies that the company is unlikely to file for bankruptcy. Next, I will pass to the Cik Nur Syafiqah.
Now let's look on cash flow analysis. These are the analyses that we had performed, which are operating cash flow to total debt, operating cash flow per share, and operating cash flow to net income. Now let's look on operating cash flow to total debt. Operating cash flow to total debt is functioning to calculate the proportion of a company's total debt that is supported by its operating cash flow within a specific accounting period. This ratio provides a concise overview of the company's overall financial condition. A higher ratio indicates that the company has a greater ability to fulfill its debt obligation. In 2019 and 2020, the operating ratio to total debt for Top Glove is favorable as the ratio is more than 1%. In addition, in 2020, the ratio increased significantly from 60.79% to 137.39%. As COVID-19 has affected the world, the demand for hand gloves is boosting as they are essential items for the healthcare industry in handling infected patients. Thus, it makes the demand for Top Glove product increase, which at the same time boosts the company's operating cash flow to total debt ratio. Now, let's look on operating cash flow per share. This measure determines the cash flow allocated to each share of stock, and a higher operating cash flow per share indicates superior financial performance and a stronger ability to generate cash flow for the company. In 2019, Top Glove was able to distribute RM0.21 to each company's outstanding share towards each shareholder. In 2020, the number of dividends that can be allocated to shareholders increased to RM0.42. It showed favorable performance as the company's operating cash flow is improving compared to last year. In 2021, Top Glove operating cash flow per share is significantly higher at RM0.98 compared to 2020. The ratio shows favorable performance for the company as it is able to boost its operating cash flow. Even though the number of units of share distributed is lower compared to 2020, the increase in operating cash flow makes the company capable of distributing the highest amount of share for the year 2021. Now, let's move on to operating cash flow to net income. The ratio is a measure that assesses a company's ability to generate cash from its operation, and it is preferable for this ratio to be above 1. In 2019 and 2020, the ratio of cash flow to net income indicates that Top Glove is able to cover its current short-term liabilities and still have earnings left over. This is because the ratio for both here are 1.43 and 1.93, which are greater than 1. However, in 2021, the ratio for the company is unfavorable as the ratio is equal to 1. The slight differences between operating cash flow and net income indicates Top Glove operating cash flow is not healthier compared to its net income. It also indicates that the company is slightly able to cover its current short-term liabilities with a modest amount of earning.
Alright, Now let's see on how does the existence of COVID-19 did affect the performance of Top Glove Corporation Berhad. Top Glove Corporation Berhad, like all companies, has been significantly impacted by the global COVID-19 pandemic. The spread of disease has increased awareness about hygiene, leading to a greater demand for gloves. The medical and healthcare industries now heavily rely on Top Glove's products. The need for gloves has been further increased by the outbreaks of diseases like H1N1, SARS, bird flu, and COVID-19, which have increased public understanding of healthcare and hygiene. This has resulted in a global demand for gloves, which was already growing steadily before COVID-19 at a rate of 10% per year. It was stated in the quarter report ended 31st August 2021 that the demand for gloves is expected to continue rising steadily, increasing by 10% to 15% annually due to increased knowledge and hygiene requirement in both the medical and non-medical sectors. The introductions of new virus strains as the pandemic becomes an endemic will also contribute to demand growth. Additionally, the company expects increased sales volume in the upcoming quarters, especially with the resumption of sales to the United States, one of its important markets. Top Glove aims to take advantage of this opportunity to improve the quality of gloves, increase market share, and enhance sales. Moreover, Top Glove has received government support, including exemptions from import duties for latex and a lower statutory tax rate. The government assistance aims to help glove manufacturers expand their customer markets and reduce production costs. In exchange for government support, in 2021, the company contributed Rm2.2 billion in corporate income tax towards nation building and sustainable economic growth, as well as Rm191 million to the Malaysia COVID Fund and Community Food Aid Program called Lend a Hand. However, Top Glove's reputation has been negatively impacted by the allegations of inadequate human rights practices. The company is facing charges from the Malaysian government for providing poor worker accommodations, being involved in forced labour, unlawful overtime, bad working conditions, and debt slavery. The United States has also implemented a rule prohibiting imports of goods alleged to be made with forced labour. These allegations can harm the company's reputation, leading to a decrease in sales and increased costs for hiring and retention. As the US is Top Glove's largest market, accounting for 34% of its sales, the company faces pressure to address these issues quickly. It has already resolved problems related to hiring foreign workers and paying recruitment fees. To rebuild its corporate reputation, Top Glove must provide the public with the required evidence and records.
Now let's look on non-financial analysis. Based on Sustainability Reporting 2022, Top Glove provides significant attention to its supply chain management. By 2025, Top Glove will achieve 70% traceability to plantation for natural rubber sourcing to improve the transparency of its supply chain management. In addition, the company also engaged with natural rubber supplier in Thailand and Rubber Authority of Thailand (RAOT). As RAOT is an established organization, Top Glove started the engagement and pilot test of the traceability template with RAOT. Following that, Top Glove will develop a similar traceability template for the glove manufacturing plants in Malaysia. The process of monitoring used by the supplier on land clearance activity and fire hotspot throughout satellite image will be initiated by Top Glove in order to achieve objective and spread awareness about the importance of the traceability project. By doing that, the company is able to improve its governance and gain the trust of its stakeholders. Moreover, Top Glove also focuses on the importance of human rights and labor management relation. As the company respects its employee, Top Glove human rights and ethical conduct guide the company with several instruments in treating its employees. Not to forget, in 2022, Top Glove conducted 59 social compliance audits on M4E Business Social Compliance Initiative (BSCI), SEDEX Member Ethical Trade Audit, SMETA, and Customer Code of Conduct. The human rights risk assessment, due diligence, and audit are important to demonstrate the weaknesses and unchanging commitment to safeguard the human rights of the employees. As a result, the organization will be able to comply with the social compliance audit, which will help to satisfy all parties, including shareholders and stakeholders.
Now let's take a look at the strengths and weaknesses of Top Glove that have been identified. The first strength of Top Glove Corporation is that it is the leading company in the medical equipment and supplies industry, holding a strong market share. With its first mover advantage, the company has established a prominent position in the industry, allowing it to charge premium prices and achieve higher profitability. As the world's largest rubber glove manufacturer, Top Glove holds about 26% of the global market share. It has expanded its presence in both domestic and foreign markets, with manufacturing facilities and marketing offices in multiple countries. By acquiring SPN Sudan Berhad, Top Glove extended its operation and entered the markets in Europe, Japan, and North America, further solidifying its position in the international glove market. The other strengths of the company is Top Glove Corporation has a diverse product line that caters to various customer demands. The company's wide range of products, including gloves and non-glove items, has contributed to its popularity and increased market share. With investment in medical equipment and supplies, Top Glove has been able to meet the needs of different customer groups. It produced a total of 32 different gloves and non-glove items, ranging from examination to surgical gloves, industrial use to non-glove goods. By offering such a diverse selection, Top Glove aims to enhance productivity and satisfy a larger customer base. However, along with the strengths, there are also weaknesses found. The first weakness is the sector in which Top Glove Corporation operates is experiencing high competition, putting pressure on the company's productivity and profitability. Managing performance and maintaining profitability becomes a significant challenge in this competitive environment. Moreover, the company, along with other Malaysian glove manufacturers, faces a labor shortage, especially during the pandemic when the demand for medical gloves has surged. This shortage has led to revenue loss and the inability to fulfill the increase of demand. Additionally, Top Glove's high turnover rate poses another challenge as the company incurs high costs in staff retention efforts. This labor issue is currently one of the major weaknesses for Top Glove Corporation. The next weakness for the company is with the changing dynamics of the healthcare sector and the diminishing importance of traditional dealer networks. Top Glove Corporation needs to establish a robust supply chain network. This entails significant investment in technology and resources, considering the impact of technology advancements and evolving business practices. Despite the costs involved, Top Glove prioritizes staying at the forefront of the technology. It has invested in modern technology for latex glove production, but this comes with high costs for purchasing and maintaining equipment. The company also needs to attract and train qualified personnel to operate the machinery. Overall, Top Glove must allocate substantial funds to operate and leverage this advanced technology.
Now let's moving on to the short-term future prospect. The first short-term prospect is a slower pace of raw material costs. Raw material prices show a downtrend quarter on quarter as the price of natural and nitrile latex weakens. The price for this type of latex are expected to continue reducing, and it will increase the net income of Top Glove. The company need to take this opportunity to improve its revenue as the part of raw material is decreasing. However, if the price of raw material is rising, alternative materials should be figured out in order to minimize the cost of products. Moreover, Top Glove is also regaining its export from Malaysia to United States of America, which will help to improve sales volume in the quarters further. Previously, the US banned the exportation of Top Glove product as the country did not support employee exploitation. This shows the importance of Top Glove to maintaining its economic, social, and governance issues in a good position. Thus, the company must find ways to improve its ESG performance in order to gain trust from the public and maintain its image. Furthermore, Top Glove had to expand its business landscape to align with market trends and the demand-supply situation. The strategy of expansion will improve the company's scalability in the rubber glove market to fulfill global demand. However, research and analysis need to be conducted frequently in order to provide sufficient insight and be able to make the correct decision for the purpose of expansion. In a nutshell, Top Glove Corporation Berhad's profitability is in a great shape as the company was able to obtain a high increase in net profit, which was 340.78% in 2021. It shows that the increase in profit will make the company stable and able to generate lots of new products and ideas. However, the company has some issues regarding its asset test ratio. Top Glove should improve its asset test ratio, especially its cash and cash equivalent, to enjoy a high profit with stable liquidity performance. Nevertheless, the Allman Z score for Top Glove display a value of 13.58, which is higher than 10. It shows that the company can maintain consistent business operation and is less likely to file for bankruptcy. Moreover, some strengths and weaknesses had been identified. These strengths and weaknesses need to be effectively managed to avoid negative implications for the business. Due to COVID-19, Top Glove has received positive impact from the unfortunate situation as the demand for glove is increasing and receiving support from the government. Furthermore, Top Glove has a bright short term in increasing profitability in the future. As the price of raw material decreases quarter by quarter, regaining export to the USA and the company expand to open various factories, a bright future awaits Top Glove, which will be able to satisfy the customer demand as they keep changing from time to time. Besides, the non-financial analysis of Top Glove also show the company's good performance. This is because the company pays significant attention to its supply chain, human rights, and labor management relations are important as they relate to the company's economic, social, and governance performance, which are also important indicators aside from financial performance. I think that's all from us. Thank you.